Hello everyone and welcome to this video. Today we're going to be looking at a depreciation of fixed asset question. So this is always a 60 marker and this is year 2021. So just reading through the question. So the best way to do it is read through the question, pick out all the vehicles you need or your vans you need for your table, the years you're going to be working for, and then creating a table, which I have on the next page. The table will always be set out the same way, where we have vehicles on the y-axis are going down in the rows, when the columns are going to be the years. So, Ryan Transport Limited prepared its final accounts on the 31st December each year. The company's policy is to depreciate its vehicles, so 15% of cost per annum. So the first thing we need is straight line method. Perfect. Now, so calculate it from the date of purchase to the date of disposal. So that's always the case. And to accumulate this depreciation in a provision for depreciation account. So that's the account we're going to need. We're going to need a depreciation account. So on the 1st of 1st, 2019, Ryan Transport Limited owned the following vehicles. So when I see on the 1st of 1st, 2019, I kind of assume that I'm going to be creating T accounts for this year and next year and perhaps even the year after. So if we go down to the end of the question, it says, you are required to show workings for each of the 2 years 2019 and 2020. So we're going to be creating T accounts for 2019 and 2020. So we purchased vehicle 1 in 2015, the 1st of 1st, 2015. So 2. We have vehicle 1, vehicle 2, and vehicle 3. So as I said, all of these are going to be as rows. So you'll have vehicle 1, 2, 3, just like that in your table. So this was 2015, 2016, 2017. So that's when we're going to be introducing depreciation in the table for these vehicles. Now note that the vehicle 1 was the first vehicle bought in 2015, so that's going to be the beginning of our table. So that's these dealt with. So on the first, so number 3, so this is the first adjustment. On the 1st of the 6th, so the 1st of June 2019, vehicle number 3, so we're talking about vehicle 3, was crashed and traded in against a new vehicle costing 90,000. So X, we're getting rid of it. Then we have vehicle 4, 90,000. The company received compensation to the value of 50,000. And the check paid for the new vehicle was 86,000. So 86,000 is coming out of our bank, whether we received compensation, which we can kind of see as a bank increasing, if you want to look at it like that, or it's it's going to be an asset, or it's going to be on the debit side, compensation of 50,000. So that's that ticked. So now part 4, what are we getting rid of? We're getting rid of vehicle number 1. Now, it was traded in for 16,000 against a new vehicle, so we're going to have vehicle number 5. So we're going to have 5 vehicles in this question and in our table. Now, one of the most important things that's going to catch people out is the refrigerating unit. So this was bought on the 1st of the 7th, 2016. So with vehicle number 1, we have a refrigerating unit, so I'll call it a refrig unit, that was purchased in 2017. So we'll include them in the same figure, or we'll include them in the same transactions we go through, and we'll keep them together in the table. The refrigerating unit was depreciated at a rate of 20% of cost for each of the first 2 years, and thereafter at the rate of 15%. So this is kind of something to try and just confuse you. Again, separating the H1 students from the rest of the students with kind of throwing in these things. What we need to do, we need to create a vehicles account, provision for depreciation account, and a disposal account. Very good. So you can see that the depreciation account carries loads of marks because we're going to be depreciating every year. So we're going to have to, well, I'll just write down as 5. Don't forget to charge depreciation to P&L each year. So that's really important. And we're going to have a lot of marks going for that. As well as kind of your opening balances. You're going to be dealing with disposals in here as well. So there's a lot of stuff that are inside the depreciation account. So that's why it's so heavily marked. Then our theory, explain why a company charges depreciation in calculating its profits. So we'll touch on that. We kind of need 2 points really to get maximum marks of 4. And then show the relevant extract from the profit and loss account year ended 31st of 12th, 2020. So what we're going to need here is if we have a profit or a loss on disposal. So that's a P&L figure. As well as that, any depreciation charge for the year. So that will both be coming out of, or that will both be extracts in the P&L. And that is just for 2020. So it won't be including anything from 2019 in that. So that's an overview of the question. So now we'll look at the table that I already created that takes into account all of the information we got. So here is our table. So what we see is we always have the opening costs. You can see that there. So the first column is cost. Everything else then is associated with depreciation. So it's always negative figures. Okay, you can see our vehicle 1 right next to the refrigeration unit. And we don't necessarily care when it was bought, but we just put them together because obviously if the refrigerating unit is on vehicle 1, it's just easier to keep them together. So we can put in all our costs there now. 60,000, 74,000 and 84,000. So we have 60,000, 74,000 and 84,000. Then I'll put in my refrigerating unit as well of 24,000. Now, so we didn't buy anything. So the only thing we have in 2015 was vehicle 1. So it's only when you have something can you depreciate it. So we're not going to be depreciating any of these. We're only going to be depreciating the vehicles. So remember, straight line method, 15%. So that is 15% of 60,000. And that is 9,000 euro. So I might just use blue for depreciation. So 9,000. Perfect. Now, we can look at, so as of now, the total is only 9,000 because we don't have anything else. So we're only kind of looking at the adjustments in 2019 and 2020. So we can just continue with our basically just adding depreciation until up to this mark here. So we bought it on the first 15, that's why it's a full year's depreciation. So again, it's going to be another 9,000 here, another 9,000 here, and another 9,000 here. So we have 9, 18, 27, so 36,000 worth of depreciation associated with vehicle 1. Now, with the fridge freezer or the refrigerating unit, we bought it on the 1st of the 7th, 2016. So our policy is to depreciate from the date of purchase. So that means, so we'll go to, so the 1st of the 7th, 2016. So we can just go down here to our adjustments. And we have refridge. So we have 01, 07, 2017. And we have 20% for the first 2 years and then 15. So 24,000 multiplied by 20% is 4,800. So that's a full year. That's 12 months. However, we've only had it for all of July, August, September, October, November, December. So we've only had it for 6 months. So it's going to be half of this. Or divided by 12 multiplied by 6. 2,400 in 2017. So 2,400 in 2016, sorry. 2,400. Now it's a full year's depreciation in 2017 and 2018. Now 2018 is a little tricky, so we'll have a look at that again. So it says in the question that we have 20% of cost for each of the first 2 years. So we only have 6 months here. That's 6 months. So that's 2016, that is. Then in 2017, it's 4,800. So that's 12 months, so that's perfect. Now, in total, that's only 18 months. So the next 6 months will also have to be at a rate of 20%. So 2018 all the way up to the 30th of the 6th, 2018, we're going to still have to charge 20%. So that's another 6 months, and that's 2,400. Then for the remaining, from the 1st of the 7th, 2018 to the 31st of 12th, 18, that is 15%. So 15% of 24,000 is 3,600. Put the comma in the wrong place. So that's a full year, but again, we only want 6 months, so we half that, 1,800. So for 2018, what we're going to be putting in is 2,400 plus 1,800, which is 4,200. So that's tricky. Now, also what we could have done, it would have been wrong, but we could have done it, is we could have just applied 4,800 in 2016, 4,800 in here, and then only put 6 months of 15% in there. But I think that would be wrong, essentially. So if we add all that together, the total depreciation is 11,000. So 11,400. So again, it's just depreciation from here all the way to there. Okay, that was tricky. Vehicle number 2. So vehicle number 2 was bought on the 1st of the 4th, 2016. So the 1st of the 4th, 2016. Again, it's 15% is our cost per annum. So 15% of 74,000 which again is 12 months depreciation. So that's 11,100. So we only have, so January, February, March. So we bought on the 1st of April. So we have all of, we have to count for all of May. So sorry, all of April, May, June, July, August, September, October, November, December. So we need to charge depreciation for 9 months. So we'll divide that by 12, multiply it by 9, is 8,325. So that's going to be my depreciation charge for 2016. $8,325, and then a full year's depreciation in 17, and a full year's depreciation in 2018, and in total that is 30,525. Very good. So we're getting there. Now I might just, so we'll leave that as vehicle 2 for now, because we'll have we probably have disposal on that. Oh no, we'll see what we have disposal on again, sorry. We have disposal on vehicle 1, vehicle 3. So we might just use this as vehicle 3. And we can use this for disposal then as well at the same time. The 1st of the 8th. $2017. So we have no depreciation charge in 2016. Or, yeah, in 2016. Only 2017 and 2018. So we can say 84,000 at 15%. So what is that? 12,600. So if we have 12,600 is a full year, so 12 months, and we want for the 8, 9, 10, 11, 12, so we want 5 months depreciation. So 12,600 divided by 12 multiplied by 5 is 5,250. So you have 5,250 for 17, and then 18 will be the full amount, the 12,600. So that's 17,850. Now, so we don't have vehicle 4 or 5 until our adjustments. We can just say there's no depreciation here at all. I am closing. So again, nothing there either. We might as well kind of add all these down now, just so we have them. So I don't necessarily need to get the totals here. The only totals that really matter are for closing of 2018, because that will be our opening balance of depreciation for 2019. And that is 95,775. That's going to be opening balance of 2019. And this is going to be P&L charge for 19. And this is P&L charge for 20. And then total depreciation is used for what we're disposing of. So with that, we can actually start looking at our T accounts. So our opening balance for our 2019, so we have vans 01, 01, 2019, opening balance, and it's a tree of those combined. So we have 242,000. Now, and if you don't know exactly why it's a debit entry, we'll just make our URL. So always go back to URL. So we have earnings and assets are positive, revenue and liability are negative on the debit side. And then again, we can do URL. So our revenue and liabilities are positive on the credit side. Expenses and assets are negative. So I called this account vans, just from a previous question when we were dealing with vans. So I'll just rename this one vehicles. So that's our opening balance. Perfect. Now, because vehicles are assets, assets are plussed on the debit side, so it's a debit balance. And then we'll go down to our depreciation of, again, I said vans. I should have said vehicles. So opening balance for vehicle, depreciation of vehicles is, so on the 1st of the 1st, 2019 again, our opening balance. So the opening balance is, let's say, the accumulation of all of our depreciation for vehicle 1, so that's 2015, 16, 17, and 18. The accumulation of depreciation in the fridges, so 16, 17, 18. Vehicle number 2, 16, 17, 18. Vehicle number 3, 17, 18. That's all in this column here, the closing 2018. So it's 95,775. So now that is our T accounts for opening balance. So we're now at the beginning of 2019 essentially. So on the 1st of 6th, 2019, vehicle number 3 was crashed and traded in against a new vehicle. So as I said, we'll just use this one as our vehicle. Vehicle number 3, so on the 1st of the 6th, 2019. So essentially, so the van crashed on the 1st of 6th, 2019, so that's when we're getting rid of it. So it had accumulated 5 months depreciation. So 5 months depreciation, we've already actually got it, because when we first bought it, we only had for 5 months, or sorry, we bought it on the 1st of the 8th, which was 5 months depreciation. So again, that much of depreciation we use in 2019 for vehicle number 3. Perfect. 5250, there'll be no depreciation here. So the total depreciation that was accumulated on vehicle 3 is that plus that plus that plus that, which is 40,950. Perfect. Now we bought a new vehicle costing 96,000. There could be 96,000 in here. And if we bought it on the 1st of the 6th, 2019, so that would be vehicle, I'll just call this disposal 1. So then if we're talking about vehicle number 4, so the 1st of the 6th, 2019, so you have to charge depreciation up until the very end of the year. So for vehicle number 4, it's costing us 90,000. So 90,000 at 15% is 13,500. Now, if we have it from the 1st to the 6th, that means we have all of 6, all of 7, 8, 9, 10, 11, 12. So that's 7 months out of 12, which is €7,875. So 7,875. 7,875. 7,875 for vehicle 4. And when we're talking about a disposal, I might as well just make a few notes. So the check paid was 86,000 and the compensation was 50. So comp was 50,000 and we paid 86,000. So essentially that means the trade-in is €4,000. And the trade-in is €4,000 because if it's worth 90,000, we only paid 86,000, then we would have traded in van 3 for 4,000. So we didn't get much for van 3. So that is adjustment 2019. Now we also need to get depreciation charge. So nothing happens to vehicle number 1, so we charge a whole year's depreciation again, 9,000. Nothing happened to vehicle 2, so that's 11,100. And nothing happened to the refrigerating unit, so this is actually 3,600. So that is 15% of 24,000. Yeah, because remember this figure is 6 months of 4,800 and 6 months of 3,600. So that's where this comes from. And that's that. So that's 2019 done. Don't forget we need our P&L charge for 2019. There's a lot of marks going for that. So we add up everything. So we have 9,000 plus 3,600 plus 11,100 plus 5,250 plus 7,875 is 36,825. 36,825. So that's going to be a P&L charge in our T accounts. Now, for the last part of the table, the adjustment, we'll go back. So we can see that we have vehicle number 1 was traded on the 1st of the 9th. So the 1st of the 9th, 2020. So we have vehicle 1 and the unit, so the refrigerating unit. So it was disposed of. So if you look at vehicle 1, we know it's 15%, 15% of 60,000 for 8. So we had it for 8 months of the year over 12. That's €6,000. So we have €6,000 worth of depreciation for 2020. Now if we look at the unit, again 15% of 24,000 for 8 of the 12 years is 2,400. So it's 2/3. So that's being disposed of. So this refrigerating unit was, okay, we have that, that's grand. We bought a new vehicle costing 36,000. Or 96,000, sorry. So you can actually see that I put the wrong figure for vehicle number 4. This should be 90,000, and vehicle number 5 is 96,000. How much depreciation? So it wasn't depreciated in 2019 because we only bought it in 2020. So it has, for vehicle number 5, so it's 0109 to the 31st of the 12th. That means all of 9, 10, 11, 12. So there's 4 months. So 4 of 12 months at 15% of 96,000. Let's see what that is. $4,800. So that is a vehicle charge 2020 vehicle 5. So we'll get the total depreciation for vehicle 1. So there's loads of depreciation there. So we have 36,000 anyway from the closing, and then we have plus 9,000 plus 6,000. So 51,000 worth of depreciation has been taken away from the cost. And for the refrigerating unit, 11,400, 3,600 and 2,400 is 17,400. We don't dispose of vehicle 2, and we don't obviously dispose of vehicle 4 or 5 because they're new. So it's a full year depreciation for vehicle 4. So 90,000 multiplied by 15% is 13,500. And 74,000 at, so this is 11,100 because it's the same every year. So what's the depreciation charge for 2020 that has to go to my P&L? 37,800. Perfect. So table is complete. Now I might just write down a few notes like last time for the disposal to make it easier for me. So okay, so we got a trade-in of 16,000. So the only thing we're given is a trade-in of 16,000 euro. So that's the only bit we get for the disposal. Now, so this is where the fun part comes in. We have to put everything into our accounts. So we're doing the 1st of the 1st, 2019. We dispose of vehicle. We dispose of vehicle 3 on the 1st of the 6th. So the 1st of the 6th, we'll say 19. We're sending it to disposal. And vehicle number 3 is worth 84,000. So double entry. The 1st, the 6th, 19. And 84,000. Coming from vehicles account. Good stuff. So we have to also take our depreciation for van 3, which is 40,950. So 40,950, sending it to disposal on the 1st of the 6th, 19. I keep saying 21. And this is where I realized that I went wrong in the vehicle number 3 depreciation. What did I do wrong? Well, if we look at it, this 40,000, I've double counted. So I've double counted this because that is just the accumulation of those two. So what I'm going to have to do is I'm going to have to change that amount. And I hope you spotted that before I did. So it's just going to be these two put together. So 17,850 and 5250 is 23,100. So that's my bad. So 23,100 is depreciation. 23,100. Then if we go to what we got in our disposal, so we got compensation of 50,000, so that would be coming from our bank. So if you think about it like this, let's say compensation would hit our bank account. Bank is an asset, so actually, so I shouldn't call it compensation, I should call it bank. So we would have received in our bank account 50,000, and then that double entry would be to our disposal. So that would make this figure here 50,000, and we got a trade in of 4,000. So the first of the 619, the first of the 619, and we have this. If you balance this, remember when we're talking about disposals, no money, there's no balance called down or balance brought down, it's just P&L. So which side is bigger? The 84,000 is bigger. And then you try and make up the difference, so that is 6,900 P&L. So you'd balance that at the end of the year, so it's 31st of the 12th, 19. So what is that? Is that an expense? Is it a gain? Well, there's a few ways to think about it. If we think about our T account, so P&L is a T account. If we're double entering that into our P&L account, we'd have 6900 here. So you think of Earl EA, so it has to be an expense because it's on the debit side. So that is a loss on sale of disposal. So we'll just put loss. So that is that. The other way you could think about it is if you kind of think at net book value. So what's the actual value of the vehicle now? So currently 84,000 less 23,100 is gonna be 60,900. Okay, we got comp of 50,000 plus 4,000 trade-in, which is 54,000. So the value of the vehicle now is 60,900. We only got 54,000. So to make up the difference, we basically made a loss of 6,900, and that's where the figure is there. So you can think about it in net book value terms if it's easier for you, but you still have to create the T account, as that's what was required in the question. We have to do the vehicles account, the provision for depreciation account. Okay, disposal. Now, what are we forgetting? So we can't finish off anything unless we add the P&L charge for 2019. So 36,825. 36 825. The end of the year. Again, it's a P&L. It's an expense because if you double entry that to the P&L account, it will go to the debit side. If you debit, it's an expense. Now we can balance. So which side is bigger? So 95,775 plus 36,825 is bigger. 1,326. So to balance out, we'll have to take away 23,100. So we have 109,500. And that's a balance. So we're calling down the balance. So it's going to be a balance brought down 109,500. For the end of the year, this is for the opening of the year 2020. Vehicles. So when we dispose of the vehicle, we got a new vehicle of 90,000. So this will go up here by 90,000. The 1st of the 6th, 19. And this is going to be made up of bank plus my allowance or my trade-in. So if we balance it, 332,000. So 332,000. So 248,000 is balance called down for the end of the. So now we have a balance brought down of 248,000 for the 1st of the 1st, 2020. It is obviously the end of the year 2019. Okay, so that's your vehicles account. So now we basically have 2019 sorted. That's great. Now, for 2020, what we need to do is, again, the first thing I'm going to look at is our disposal. So we'll try and get this one right this time with our depreciation. So we have to remove our vehicle 1 plus our unit, which is going to go to disposal on the 1st of the 9th, 20. So that is going to be, so it's the cost 84,000. So the value of it without taking into account depreciation is 84,000. So 84,000. Sorry, put on the wrong side. 84,000. The double entry. So the 1st of the 9th, 2020. So it's going to be from the vehicles account. So it's vehicle plus the refrigerator unit. Now the depreciation is going to be 51,000 plus 17,400. So that's 68,400. 68,400 to disposal. The 1st of the 9th, 20. So 68,400. Yeah, 68,400. So 68,400 disposal, sorry, depreciation on the 1st of the 9th, 2020. So what did we get? We got a trade-in of 16,000. So what do we get? Again, when we balance this, we have to send the remaining to P&L. So 68,400 plus 16,000 is 84,400. So 400 euro will balance that. This goes to P&L, so it's on the other side. So in this case, it's going to be a gain, or we'll call it a revenue. And it is, again, the month is the end of the year. So disposal done and dusted. We now have to do our we might as well add the vehicle here. So vehicle number 5. So it's going to be bank plus allowance. Going to be 96,000 on the 1st of the 9th, 20. And bank plus allowance 96,000. We might as well just balance this now. So what we're going to get is 344,000. So that is 260 here, which is balance called down, again the end of the year. $260. Balance brought down, perfect, that's all good. We have to send our P&L on the end of the year. So what's the P&L charge? So 37,800, 37,800. So if it's 37,800, so it's 147,300. 147,300. We have the balance is 78,900. Balance called down 31st of the 12th 20. So the 1st of the 1st 21. That's why I noticed that this one's wrong here now. So you have to go 0101 01 01 21. Okay, we're almost done. Well, we are done. Balance brought down 78,900. So those are our accounts. We have disposal, we have our depreciation, and we have our vehicles, which is what they ask us for. Now we'll go back to what they want from us. So explain why a company charges depreciation in calculating its profits. So it's going to be, we need to make 2 points essentially, and each of them are going to be worth 2 marks. So why would a company charge depreciation calculating its profits? So we can say, I'll just make a small note here. The first point we want to say is, so depreciation is charged as to write off the cost of a fixed. So it's to write off a fixed asset over its, and then this is the important word, useful economic lifetime. Okay, so it's an expense in the P&L, so don't forget that. So it's expense in the profit and loss, so I just named that as well. So if we fail to charge depreciation, then that will lead us to 1, overstated profits. So overstated profits, which we don't want. And as well as that, our net worth will be overstated. So if our profits are overstated, our net worth will be overstated too. So again, the financial statement would not show the true and fair value of the business. So you can kind of talk about fraud, but I wouldn't, but that's kind of what you're getting at if you do something like that. So show the relevant extract of the profit and loss account. So this is actually nice and straightforward. So D part II, what you're going to have is you just say like extract. So we just say profit and loss account. So make sure to say account. So it's for the year ending 31st of the 12th, 2020. So we'd have less selling expenses. So depreciation is a selling expense. So our less selling expense is going to be our 2020, the P&L depreciation charge, 37,800. Would have depreciation charge 37,800. Then we also made a gain from a disposal of a fixed asset. So that would be we could just say in our gains, so you have gain from disposal of a fixed asset, and that was 400. And that's kind of the only thing you need to do. An extract, all you're doing is you're putting in what should be in the P&L. So we obviously don't know anything else about the P&L account. We don't know anything about sales, purchases, purchase returns, taxes, rent receivable. We don't know any about that stuff. But everything we do know, we've inputted into the extract. So that's really all we need to do. So just to recap, I actually have, I guess, the most important things here anyway. So you need to read the question to create your table. So for example, you'd have to read this and say, okay, I have vehicle 1, vehicle 2, vehicle 3. I bought a vehicle in 2019, that's going to be vehicle 4. I bought a vehicle in 2020, that's going to be vehicle 5. Again, to separate the H1 students from the rest, or even the H1, H2 students from the rest, this refrigerating unit fitted is going to be important. So it's attached to the vehicle number 1. So in the table, I would put that attached right just next to vehicle number 1 or underneath vehicle 1. So it's easy to see them together. The other thing that separate the really good students that are aiming for top marks would be things like our dates. So the 1st of the 6th, I kind of, once or twice, I kind of got that wrong. So just because of lapse of concentration, so it's not 6 months depreciation, it's only 5 months because we don't charge depreciation. So we see the 1st of the 6th and you automatically think, oh, 6 months. But because it's the 1st of the 6th that we're getting rid of it at, that means we only accumulated 5 months depreciation. As well as that, the different rate of depreciation, so 20% for the first 2 years and thereafter 15%. So what was really tricky there was that in 2016, it's going to be half of that 20%. Then in 2017, it's going to be a full year. So that's only 18 months. So then the other 6 months that we're charging 20% is going to be in 2018. And the other 6 months is going to be in 2018, is going to be 15%. So that's this amount here. So read the question to create your table. Again, don't forget your vehicle number 1 will always be the year you have to start at. So we start our table at 2015, go all the way up to 2020, and do total depreciation. Another thing to be careful of is your closing 18. So I did that again, lapse of concentration. Once you have your closing for 2018 created, don't include 2017 and 2018 again. So this 17,850 is both of these put together. So you don't want to add them in your calculation. Don't forget your P&L charge each year. In your disposal, make sure that you're sending them to the P&L as opposed to doing balances brought down, carried down. There's your P&L charges. And that's basically it. So thank you very much for watching. I hope it made the idea of doing a depreciation question a bit easier. They're very handy again for helping with question 1s, and then if we don't like the question 1s that come up, then we may have to do it as a 60 marker. Thanks very much for watching. Goodbye.